Hello students. So in the last two lectures of amalgamation, we have already covered till net payment method of purchase consideration. Now in this lecture, we will cover the next method, that is net asset method of purchase consideration, with its practical example and a mixed example of net asset and net payment method also. So all of you have a look at your pamphlets. In detail, we understand first net asset method, and you can underline the important points also simultaneously. Net asset method. Normally, the net payment method is used to compute the purchase consideration. However, it cannot be used if details of all payments are not available. This I told you that if details of all payments are not available, any amount is missing, any mode of payments amount is missing, then first we will have to use net asset method. After that only we can use net payment method. So particularly this net asset method will come into force in any of the questions only when the amount of any mode of payment is missing. Example, in a case where the purchasing company agrees to pay, say by way of 1000 shares, and the balance, okay, the balance in cash, balance means how much? We don't know. So first we will have to find purchase consideration by net asset method. From that you will subtract the value of 1000 shares which is given, then only we can obtain the balance amount which is paid in cash. Okay, so whenever any mode of payments amount is missing, we will be first using net asset method. The purchase consideration is determined by adding up the agreed values of all assets taken over and deducting the agreed value of all liabilities taken over. So this is the formula: agreed value of all assets taken over minus agreed value of all liabilities taken over. While determining the amount of purchase consideration under this method, care should be taken of the following. First, the term assets will always include cash in hand as well as cash at bank unless otherwise stated, but shall not include any fictitious assets like preliminary expenses, underwriting commission, discount on issue of shares or debentures, P&L debit balance, etc. So asset will always include cash in hand as well as cash at bank until and unless it is specifically mentioned in the question that A Limited took over B Limited business except cash. Then we will not include cash. But if it is simply given A Limited took over the business of B Limited, then that assets taken over of B Limited will automatically include cash also and bank balance also. However, in assets, fictitious assets are never to be included. By the way, in the new regime, new formats of company final account, fictitious assets are those assets which come in the category of other non-current assets and other current assets. Okay, in the new formats, whichever items are given under the heading of other non-current assets and other current assets, those will fall in the category of fictitious assets. Okay, in the new format, they'll come under the category of other non-current assets and other current assets. These two will never be taken in this method. Now, assets not taken over by transferee company should be excluded. Nothing to remember in this, because what is the formula? Agreed value of all assets taken over. So automatically not taken over assets are not to be included. If there is goodwill or prepaid expense, the same should be included. Okay, goodwill given in the balance sheet, prepaid expense given in the balance sheet will always be included. They are a part of asset only in the assets taken over unless otherwise stated. The term liabilities will mean all liabilities to third parties. Means on the liability side everything is not to be deducted. Only external liabilities other than share capital and reserves, external liabilities are only to be deducted. The term trade liabilities will mean trade creditors and bills payable. This you already studied in company final format also. Trade payable includes creditors plus bills payable. The term liabilities shall not include any past accumulated profits and reserves. Okay, profits and reserves are not external liabilities like general reserve, reserve fund, sinking fund, dividend equalization fund, capital reserve, security premium, capital redemption reserve, profit and loss account, etc. Okay, these are all payable to the shareholders and not to the third party. So they are not third party liabilities or external liabilities. So liabilities will never include this profits and reserves. In the formula, agreed value of assets minus agreed value of liabilities, liabilities will not include reserves. If any fund or portion of any fund denotes liability to third parties, the same must be included in liabilities, okay, such as staff provident fund, workmen's savings bank account, workmen's profit sharing fund, and even this one is important, workmen's compensation fund, but up to the amount of claim would be a part of your third party liability. So if workmen's compensation reserve is say 30,000 and in the adjustment it is given workers claim is admitted 5,000, then 5,000 we will include in third party liabilities out of 30,000, but remaining 25,000 will stand in the nature of reserves and not to be included. If any liability is not taken over by the transferee company, the same should be excluded. Quite obvious, because again in the formula we take agreed value of assets taken over and agreed value of liabilities taken over. So obviously if they are not taken over, not to be included. And this we studied in net payment method also, that the term business will always include both assets as well as liabilities. Okay. So we take up with one extra example, two extra examples rather. First we take up with one extra example to just understand the concept of net asset method. You can take the screenshot of that or you can write the example alternatively as convenient to you. It's an extra example not covered in your pamphlet, just to understand net asset method. The balance sheet of X Limited, it should be make it X Limited, X Limited and Y Limited as on are given below, as on maybe 31st March are given below. Authorized and issued share capital is 4 lakhs and 3,60,000. Two companies are there and the shares are of 100 each. So 4 lakhs divided by 100 would be 4,000 and 3,60,000 divided by 100 would be 3,600. General reserve, profit and loss are not the third party liability. Sundry creditors is a third party liability, and premises, goodwill, debtors, stock bank, all are assets, but profit and loss is a fictitious asset, so it won't be included. A new company XY Limited is formed. So new company XY Limited is a transferee company and old companies X Limited and Y Limited both are transferor companies which are going into liquidation. So a new company XY Limited was formed to take over the businesses in entirety as under. Okay, I repeat, old companies X and Y going into liquidation are transferor companies. New company XY Limited is transferee company. Now first, how is the consideration discharged for X Limited? Premises is to be revalued at 1,50,000. In balance sheet you can see it's 120, but its agreed value is 1,50,000. So we have to take agreed value in the formula. Sundry debtors to be taken over at 90%. Okay, we are right now talking only about X Limited. You can see in X Limited's balance sheet debtors are 80,000. 80,000's 90%, agreed value is 72,000. And stocks agreed value again is directly given 3,15,000, which is in balance sheet 3 lakh, but its agreed value 3,15,000. Now Y Limited, goodwill to be taken over at 1,60,000. You can see in the balance sheet goodwill is 1,20,000, but its agreed value is 1,60,000. Debtors at 1,50,000. So again debtors are 1,60,000 for Y Limited in the balance sheet, but agreed value 1,50,000. And stock at rupees 75,000. Again in balance sheet 90,000, but its agreed value is 75,000. You can see premises, goodwill, debtors, stocks, agreed values are given. Bank agreed value is never given, and it should not be given because bank balance doesn't have any agreed value. If in your bank you have 85,000 rupees, its value is 85,000 only. If in your bank balance you have 75,000 rupees, its value is 75,000 only. So cash and bank balance will always be taken at book values only. Only one liability is there, creditors whose agreed value is not given, so book value will be taken into consideration, 72,000 and 1,20,000. You are required to calculate the purchase consideration of both the companies. So in your notebook, all of you note down. Now we will be finding purchase consideration by net asset method. So purchase consideration, and in bracket you all will write net asset method. And we can do it in columnar form for X limited and Y limited because formula is going to remain same. So one column we can make for X limited and one column we can make for Y limited. Now what is the formula for purchase consideration by net asset method? First, agreed values of agreed value of assets taken over. Agreed values of assets taken over. Assets will take from the asset side, but values from the adjustment, agreed values. So premises in X limited is 120, but you can see in adjustment its value is 150 agreed value. So we will take premises, it's only in X limited's books, and its agreed value is 1,50,000. There is no premises in Y limited. Same way, second asset is goodwill. There is no goodwill in X limited. In Y it's 120, but its agreed value is 1,60,000. So goodwill in Y limited's books, its agreed value is 1,60,000. Then after goodwill we have sundry debtors. Now sundry debtors in X limited it is given they are taken at 90%. So 80,000 is 90%, 72,000. And in Y limited debtors are directly given 1,50,000. So debtors are 72,000 and 1,50,000. Agreed value of debtors in X limited it is 80,000, 90% that is 72,000, and in Y limited's books it is directly given 1,50,000. Okay. Then after that, stock in trade values are directly given, 3,15,000 in case of X limited and 75,000 in case of Y limited. You all can see here 3,15,000 and 75,000. So stock in trade, or simply stock, 3,15,000 and 75,000. Okay, and other than that, on the asset side we have bank balance. Bank balance will always be taken at book value. So 85,000 and 75,000. Okay, bank balance 85,000 and 75,000. Now first we do the total of agreed value of all assets taken over. So 150 plus 72, 222 plus 315. So 5,37,000 plus 85,000. That comes to 6,22,000. Okay, 6,22,000 is the agreed value of assets taken over. For X limited, right? Sorry, 1,50,000 plus 72,000 plus 3,15,000 plus 85,000 comes to 6,22,000. Same way for Y limited it comes to 160 plus 150, 310 plus 75, 385 plus 75. So 4,60,000. Now from that we will minus agreed value of liabilities taken over. Okay, from that we'll subtract agreed values of liabilities taken over. Now you can all see on the liabilities side that there is a single external liability only, that is sundry creditors. Okay, there is only a single external liability, that is sundry creditors. So only one liability to be subtracted, creditors. And agreed value of creditors is not given, means at book value only 72,000 and 1,20,000. Okay, at book values only 72,000 and 1,20,000. So 6,22,000 minus 72,000, 5,50,000, 4,60,000 minus 1,20,000, 3,40,000. These are the purchase considerations of X Limited and Y Limited. So this is how the purchase consideration to be. This is how purchase consideration is to be obtained in net asset method. Okay. Now we take up with a mixed example, because practically after finding this purchase consideration you must also know how would you pay this 5,50,000 to X Limited in terms of shares or cash or preference shares, and same with 3,40,000. So it will always be a mixture of both net asset method as well as net payment method. After you find purchase consideration by net asset method, you also will be given the information how this payment is to be made. And in that payment information, amount of any one mode of payment would be missing. That's why we have first obtained the purchase consideration by net asset method. So look at the next example, you'll understand it from that. The following is the balance sheet of S Limited as on March 31st. 65,000 equity shares of 10 each, 6,50,000. 2,000 12% preference shares of 100 each, 2 lakhs. And other than that, we have debentures, bank overdraft, creditors, furniture, stock, debtors. Debenture issue expense is a fictitious asset, so it won't be considered. And even profit and loss account is a fictitious asset. Now P Limited takes over the company. P Limited takes over the company, so it is a transferee company. It's a case of absorption. S Limited is going into liquidation, so it's a transferor company. Okay, it's a case of absorption. One company S Limited taken over by one company P Limited. Now take furniture and fittings after depreciating the same by 10%. Furniture and fittings are 85,000, depreciating by 10%, so its agreed value will become 85,000 minus 10%, that is 8,500, so 76,500. You can work it on the calculators. Stock. For stock, the agreed value is directly given 6,86,500. And debtors, subject to a provision for bad debts 5%. So from debtors also 1,07,000, we will minus 5%. Okay, 1,07,000, 5% we have to minus. Straight away in calculator you can do 1,07,000 minus 5%. Its agreed value would come to 1,01,650. Straight away you can do 1,07,000 debtors minus 5%. So it would come to 1,01,650. Take all the third party liabilities, means debentures, bank overdraft, creditors. All liabilities are taken over. Furniture, stock, debtors, agreed value is given. Fictitious assets will not be taken into consideration. No information is given about the value of liabilities, means we'll take at book values 1,50,000, 5,000 and 2,25,000. Now discharge the purchase consideration by allotment of 20,000 equity shares of rupees 10 each. Okay, at an agreed value. Okay, at an agreed value of 12 means 2 rupees is premium. Okay, but we will take the value 20,000 into 12 rupees, that is 2,40,000, and the payment of balance in cash. What balance in cash? Missing, amount of cash is not given. So first we will have to find purchase consideration by net asset method. Okay, I repeat, balance in cash, cash amount is missing. So first we will have to find purchase consideration by net asset method. From that, we will subtract the value of equity shares, which is given 20,000 into 12. Value is 12, agreed value. 2,40,000. 20,000 into 12, 2,40,000. Okay, and then whatever amount remains will pay in cash. So I repeat, first we will find purchase consideration by net asset method. From that, we will subtract 20,000 into 12, 2,40,000 value of equity shares, and whatever amount remains would be paid in cash. Bear the expenses of liquidation which came to 8,000, ignore. We discussed that liquidation expenses, any other payments except the payment to shareholders won't be taken into consideration. So now here, first we will find purchase consideration by net asset method, and then we will apply net payment method also to find the amount of cash. Okay, first we find purchase consideration by net asset method. All of you must be writing in your notebooks. First we are finding it by net asset method. No need of columns because there is only one company, S Limited, which is going into liquidation. So straight away we can start with the formula. Agreed values of assets taken over. From the asset side, we'll take the assets, but values will take from adjustments, agreed values. So very first asset is furniture and fitting, but its agreed value as per adjustment 1 is depreciating by 10%. So 85,000 minus 10% is its agreed value. Furniture and fittings, after depreciating by 10%, so 85,000 minus 10%, okay, that comes to 76,500. Agreed value, all of you can do it in your calculators. 76,500. Then after furniture and fittings, asset side, next asset is stock, and adjustment number 1. Stock's value is directly given 6,86,500. So stock agreed value is directly given 6,86,500. Then on the asset side, after stock, the next asset is debtors, and adjustment 1, it is given provision of 5%. So we discussed 1,07,500 minus 5%, will take 1,01,650. So agreed value of debtors 1,07,000 minus bad debt reserve 5%, so 1,01,650. Now after debtors, debenture issue expense and profit and loss account are fictitious assets, so won't be considered. So 76,500 plus 686,500 plus 1,01,650. The total agreed value is 864650. Okay, total agreed value is 864650. Now, from that we have to minus agreed values of liabilities taken over. Now in liabilities, it is given an adjustment to take all third party liabilities, and values are not given, agreed values, so we'll take book values only. So debentures 1,50,000, 10% debentures. In absence of agreed values, we take book values 1,50,000. Write in inner column. Bank overdraft 5,000 and creditors 2,25,000. Okay, bank overdraft 5,000 and creditors 2,25,000. So 1,50,000 plus 2,30,000, 3,80,000 is the agreed value of liabilities taken over. Now 8,64,650 minus 3,80,000, so that comes to 4,84,650. This is the purchase consideration which we have obtained by net asset method. Now after this we will apply net payment method, that is modes of payment method or modes of payment. What all modes of payment are given? How are we supposed to pay this 484650? Adjustment 3. How are we supposed to pay? 20,000 equity shares which are of 10 but at 12 rupees value. So one mode of payment is equity shares. Okay, one mode of payment is equity shares. We are going to give 20,000 equity shares of rupees 10 but at rupees 12. So you will multiply with 12 only. 2 rupees is premium. The value would be 20,000 into 12, 2,40,000. Okay, the agreed value will be 2,40,000. And then what was given to you? That balance in cash. So do it. 484650 minus 2,40,000. What is the balance amount that will be paid in cash? 244,650. 4,84,000. From that you minus 2,40,000. So balance 244,650. Balance amount is paid in cash. So whenever this balance word, remaining word, amount of mode of payment is missing, first we have to find purchase consideration by net asset method. From that you subtract the value of whichever mode of payment is given, and then remaining balancing figure can be obtained. So with this lecture, the purchase considerations, all the methods should be completely clear. One more method is the intrinsic value method, but we shall be doing it later on only if it is done in college. Otherwise, presently it is not required to be done. Okay. Now in next lecture, we'll be starting with accounting entries. Okay. The main practical part. Accounting entries we will begin from the next lecture. So stay tuned to the next lecture. Bye everyone. See you. Love you all. Bye. Take care.